Hey everybody, welcome to Lex's Lounge. Wanted to do a bit of a financial video today and talk about all this news surrounding Amazon. As you can see in this article here, Amazon really did raise their minimum wage to $15 an hour today. And this is going to affect US workers and it's going to affect UK employees. It's a really big deal. In the United States alone, it's going to impact 250,000 to 350,000 employees. And in some places where the minimum wage is really not that high yet, it's going to have an even bigger impact. In the United States, the federal minimum wage level is $7.25 an hour. So in some states, this will be a really big deal to Amazon staff. So good on them. This is a big policy win. It's brought to you by Bernie Sanders. Jeff Bezos even pointed out that it was pressure from Bernie Sanders that caused this to happen. I believe he pointed it out on Twitter. But about a month ago, Bernie Sanders introduced the Bezos Act. It was a act that had virtually no chance of passing in a Republican-controlled Congress, but he introduced it as a way to shame Amazon, along with another Democrat, with a Ro Khanna, a Democrat from California. And in any case, the bill basically was supposed to be a call for huge corporations that have very, very wealthy owners to start paying a living wage to their employees so that taxpayers do not have to subsidize those employees. It was an easy argument and it worked fantastically, and now Bernie Sanders can log himself a huge win. Quite impressive for somebody who's not even the president to pull this off. Interestingly, the Trump White House and Bernie Sanders are in agreement. You can see it right there. Amazon $15 minimum wage is good. They agree on something. But my other end of this is the effect that it had on Amazon's share price and why we should be talking about Amazon's share price either way. So this is the day's trading in Amazon today. It basically lost $25 a share. It opened up around $2,001 a share, ended the day at about $19.71, about $30 loss. This is all after hours trading. But as you look a little bit deeper at the Amazon stock, and by the way, the reason it dropped is because shareholders don't like paying employees a living wage. But as we go out to the 3-month chart, look at this. On the 3-month chart, a recent bullish pattern has been interrupted by a lower high, that was followed after the higher high. This is could be an indication that the stock is toppish, but for a real indication the stock is toppish, look at this. This is the 16-year chart for Amazon, and it is just crazy. It is true Eiffel Tower pattern, exactly the way you saw in Bitcoin. You can see that as recently as 2016, Amazon was trading around $600 a share, and even that was a very significant rise from 2014. But now it's at 2000, and it's been an absolutely insane rise. I see this pattern happening now all over the NASDAQ, and to me it's an indication that tech stocks are just unbelievably toppish. And it's time to get rid of them if you own any. That's my 2 cents. Because I think there needs to be a big correction here before tech can continue its upward pattern. And especially in a company like Amazon, 156 times price to earnings ratio, market cap of just under $1 trillion. There is nothing to celebrate about companies breaking the $1 trillion mark. What it tells me is that they have less to go up at this point than they do to go down to correct. So I wouldn't own any of them. I don't own Google right now. I don't own Facebook. I don't own Amazon or any of them. So just because I don't feel that it's a good time to own them. But that's my 2 cents. Otherwise, be sure to subscribe, hit that like button, and we'll see you all next time on Lex's Lounge.